Welcome to Financial Headwinds, a report by RWK Goodman where we explore the state of the banking and finance industry today. In this video, we spoke to a number of contributors across the banking industry to get their views on how market turmoil and macroeconomic headwinds are affecting lending.
I think as we were just saying, Claire, I think it's very early days in the cycle. Clearly interest rates have gone up significantly, but I don't think yet we've seen the real bite from that. Clearly consumers and companies' cost of borrowing from interest has gone up, but I don't think it's fully filtered through the cycle yet.
Because of the fixed rate mortgages?
Yeah, A, fixed rate mortgages, and B, I think people and businesses just take a while to adjust and figure out what's going on and what impact that has on their lives. I think that we're already seeing a certain level of let's just take our time sort of thing. So lots of companies are not as aggressively expanding as maybe their plan said, or they're not pushing the button on specific plans that they had, which is fine and understandable. But look,
certain amount of caution, inevitably.
Yeah, and I think that's inevitable in this part of the cycle.
What's happening now? There's a lot of money in the market, but that money is funds, family groups. They will bring the money in, but you're looking at 9-10%. So the issue is then if you're looking at interest rates, so if you're looking at that, what that stresses is the valuations. The valuations will have to come down, otherwise you can't meet the criteria. This is what I think is going to happen, and we'll be back. 0.1% interest rates was luxury. We'll be back to reality in terms of getting your borrowing money at around 10%.
So I think there will still be a good level of lending, and I think people still want to lend and banks are still active. However, I just do think it's just going to have to be a bit more careful and probably a bit more consolidated over the next 12 months or so.
The collapse of a number of banks in the early part of 2023 sent shockwaves through the market. Ben Barbanel at Oak North Bank reflects on what SVB's collapse and HSBC's acquisition of its UK subsidiary meant for them and the industry more widely. Yeah.
So there's been some opportunities, particularly in some of the what I call the fund finance type work that we do. What that meant overnight was if you had a club deal where you had HSBC as a lender and SVB as a lender, all of a sudden overnight, HSBC now had a double exposure, where we picked up some transactions because of that double exposure situation. I think it also reminded corporates and reminded the population around security of deposits. And it's amazing because, we internally have always spoken about building a non-runnable bank, notwithstanding the SVB scenario. Before that was always our plan. And something like 93% of our deposit base is protected by the government guarantee up to £85,000 threshold. Whereas if you look at the SVB model, I believe only about 7% of their deposits were protected.
I think the banks will have a balance sheet problem. I think they're going to be See, this subprime that happened before, there's a chance of it happening again. Obviously, it's harder for them to repossess this time round because the government's trying to protect it. But as the values diminish of properties and businesses, they will have no choice.
So what does all this mean for the UK financial market and international investment appetite? Sudhir Sharma at State Bank of India had this to say.
Now, when we come back that, the global interest in the UK international market, if we look at the investor point of view in the current times, UK market, it's quite financially stable, it's liquid, and it is respected very well. Even if we have seen, current turbulence in financial market or maybe the geopolitical tensions, but despite that, the market has been quite, supportive to the international investors. That means there is a lot of investment flowing in, a lot of new ventures are coming up. So in the financial market, if we can conclude that this is still stable, liquid, and people have respect for it.
To find out more about the approach lenders are taking as they navigate these financial headwinds, sign up to read our report.